It's the midweek edition of Business Morning. Good morning and welcome. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for joining us. Let's take a look at the news now. Oil prices dropped today, pairing overnight gains with soaring COVID-19 cases in India and a bigger than expected build in U.S. Crude stocks, offsetting confidence shown by OPEC and its allies in a solid recovery in global fuel demand. Brent crude futures fell 26 cents to $66.16 a barrel, pairing a 1.2% gain from Tuesday. And U.S. West Texas Intermediate crude futures fell 23 cents to $62.71 a barrel after gaining 1.7% on Tuesday. The American Petroleum Institute Industry Group reported crude stocks rose by 4.319 million barrels. U.S. crude had opened higher today after OPEC Plus stuck with plans to bring 2.21 million barrels per day back to the market in 3 stages between May and July. The volume includes 1 million barrels per day, which Saudi Arabia voluntarily cut. The rapid spread of COVID-19 infections in India has stalled oil price gains, with fuel use and refinery output dropping in the country, world's third largest oil consumer. However, the market is banking on a strong recovery in the United States and China to outweigh the impact.
Meanwhile, the Organization of Petroleum Exporting Countries and its allies said that the rising number of COVID-19 cases in some countries could hamper the economic and oil demand recovery despite the ongoing vaccination campaigns. According to a communique issued after the 16th OPEC and non-OPEC ministerial meeting of the Declaration of Cooperation, overall conformity to the production adjustments was 115% in March 2021, with total overconformed volumes of 1.23 million barrels per day. The meeting agreed on the continued implementation of the production adjustment decision reached last month for May, June, and July this year.
And back here, a total of 33.45 billion naira has been released by the central bank to 9 distribution companies for procurement of 605,000 meters under the National Mass Metering Program. Figures obtained from the CBN reports that Monetary Policy Committee shows that 89.89 billion naira has also been disbursed under the Nigeria Electricity Market Stabilization Facility to 11 distribution companies to improve the electricity supply in Nigeria. The report adds that a total of 803.6 billion naira has been given to 228 projects across various sectors under the 1 trillion naira manufacturing intervention stimulus. In agriculture, the report states that the Aphex Bank has disbursed a total of 1.48 trillion naira under the various agricultural programs in order to boost food supply and dampen the inflationary pressures.
Meanwhile, the Minister of Science and Technology, Dr. Bunaya Onu, is urging the organized private sector to invest more in bitumen in order to meet local demand and increase the country's volume of export. According to the minister, Nigeria has an estimated 42 billion barrels of bitumen reserve useful for road construction and 43 industrial chemicals, including heavy crude petroleum.
I am happy that NIPRI has already carried out research and development efforts towards achieving fully paved roads using locally sourced bitumen. Its research efforts covered material sourcing, laboratory characterization, and field trials of these materials. Though the trials are ongoing, the interim results are promising, as bitumen samples collected locally are suitable for road construction based on comparison with international standards.
Well, welcome back. For the first quarter of 2021, the Nigeria Investment Promotion Commission tracked $8.4 billion investment, with the manufacturing sector as the largest, accounting for about 35% of the total announcement. In the same period last year, the Commission tracked $4.81 billion in investment announcements, which shows a material increase over what was tracked last year. What are the drivers of this increase, and how can Nigeria build on this? the Executive Secretary of the Nigeria Investment Promotion Commission, Ms. Yewande Sadiku, explains this to us from our Abuja studio. Good morning, Madam, and thank you so much for joining us this morning.
Good morning, Annie. Thank you for having me.
Yeah, so when we look at the investment announcements, they are just indicators to actual inflows for the year. So is the actual for the first quarter of 2021 higher or lower than $8.4 billion? And what has been the impact of this figure in reality so far?
We won't know the actual for the first quarter of 2021 until the figures are released by NBS.
Yes.
So there's a big difference between investment announcements and actual investments. The investment announcements just give us an indicative sense of investor interest in Nigeria. It tells us whether investors are looking or not looking, what sectors they're looking at, what states they're focused on. The ultimate objective of tracking these investment announcements was to put us in a position to follow through on those investment announcements, to support the investors, to facilitate the conversion of those announcements to actual investments.
All right, we could explain that the increase from last year, it could be because of the lockdown measures that disrupted activities, but what drove the manufacturing industry contributing about 35%?
So I wouldn't say the lockdown per se. I would say COVID generally, because COVID generally affected investment interest across the world. It wasn't just in Nigeria. So the investment flows in 2020 fell materially from 2019. Not lockdown, COVID generally is more what I would say. Now, in terms of manufacturing, sometimes the announcements are very lumpy. And for this one particular announcement represented 3.6 billion out of the total of 8.4 billion. So it was just because of that lumpy announcement relating to brass fertilizer. That's what affected the lumpiness.
This sector has been shining. I mean, it's a major sector that got us out of recession because it went by 14.70% in the fourth quarter of last year, making it the fastest growing sector of the Nigerian economy in that quarter and the only sector to have grown by double digits. Where is it in this investment announcement? Because it seems it's the manufacturing that is shining in this announcement.
So we didn't see any material announcement from the ICT sector in the quarter. What you mentioned in relation to the GDP growth was from consumer activity, which was driven by COVID. So that sector was in particular a winner in the context of the impact of COVID on the economy. But we didn't see material investment activity in that quarter in terms of the investment announcements.
So I'm still staying on the ICT now because it's the new normal with COVID and even, well, we can't say post-COVID. Are there not ways to attract investment into that sector? Because it has a lot of potentials. The young people are there. I mean, it's the new way of life, going virtual and all that. Is there no way to attract more attention to that sector?
I certainly think that Nigeria will benefit from driving investment interest in that sector. That sector represents one, entrepreneurial energy, and two, Nigeria's youthful energy. And a lot more engagement between government and private sector. A lot of the development we've seen in the sector, especially at the entrepreneurial end, has come from young Nigerians. They share grit, they share brawn, and they share entrepreneurial energy, driving innovative activity and using technology as a disruptor, not in one sector, but across all sectors. So when you say ICT, I mean, it's driven education, it's driven logistics, it's driven healthcare, it's driven, so it cuts across sectors. And I foresee a time where technology will not be something that we talk about separately as a sector because it'll be so ubiquitous in all aspects. Certainly, though, we can benefit, as you say, from driving investment interest in that sector. And there have been a number of initiatives aimed at better understanding what it will take to stimulate investor interest. A lot of the investments we've seen now have not really been because of the actions of governments. They have happened because of the actions of the investors themselves. It'll have been useful to see how much more we can drive it based on the deliberate action of government to enable the development of the sector. But that's still work in progress.
Okay, how impactful has the government's ease of doing business policy been in attracting an investment?
The ease of doing business policies have certainly been useful in reducing the issues that investors have in investing in Nigeria. And certainly the convenience, the ease of the business environment is an important measure that investors look at. But there are other issues that we still need to work on to achieve the kind of investment targets that Nigeria has the capacity for.
The single window investor portal launch should have happened first quarter. How's that going?
I was hoping that you would not ask me that question. We've been at the development stage. We had hoped that we would launch it in the first quarter. From the engagements with the developer that we're working with, the expectation now is that it will happen at the end of the second quarter. But the target that we were all hoping for at NIPC was certainly before the end of March. But it is something that I can confirm to you is work in progress. I guess the development is taking a lot longer than we had expected, but it is certainly being done. We contracted a company called Charlie Duff, through a competitive selection process, so they're the ones working with NIPC to develop it.
All right, so in your book of states for 2020, you show the competitive advantage of each state, including the Federal Capital Territory. From your observation, how much of the potentials which you noted are being explored, at least to an appreciable degree?
I think we're still a long way from driving investment promotion, leveraging the sectors that we've identified. But you cannot drive investment promotion, deliberate, proactive investment promotion in those sectors until you have first identified them. So what we've done, if you like, is the first step to identify the sectors for each state. What we now need to do is proactive sector-based investment promotion, either on a state-by-state basis or on a regional basis. There are 9 states in Nigeria, for instance, that are ocean-facing. So if we had investments that were looking at aquaculture, especially the kind of aquaculture that likes a mix of salt and fresh water, those 9 states would be useful to push forward or to proactively look for investors in those sectors. We were looking for investors in rice, we were looking for investors by any sector. The Book of States serves as the first layer of the work that we need to do. So it's still work in progress. It's not an end in itself, not by any means.
So, I mean, when I went through it, it was very rich, and every state in the country has a lot of potentials. But we're now faced with the reality of today. We have COVID to deal with. With that, we have the insecurity issue in the country to deal with. How much of this is disrupting the exploration of those potentials?
The factors that you have mentioned certainly are disruptive in gathering investments, but they don't necessarily mean that investments will stop. We still need to do our work of proactively, and when I say we, I mean government, because I see investment promotion not as tied to one agency, but as an all-of-government initiative. One agency can act as an advocate, can act as a conduit between investors and government agencies, but you need all of government to be lined up as wanting investors, as sending that message to them, and as proactively working to resolve investors' issues when they arise. So there are a number of issues that have slowed down investments globally. There are certain issues that are domestic to Nigeria, and certainly we need to address the totality or the bulk of all those issues to get the kind of investment numbers, that Nigeria is capable of.
All right, let's look at IGR now by states. The highest contributor was Lagos and Rivers and FCT. Meanwhile, Yobe, Taraba, and Adamawa each counted for less than 1% of total IGR in 2020. How do you see these states showing up more revenue at this point?
What you've just talked about underscores why we proactively need to increase economic activity in a number of states. Government cannot do it alone because government does not have the capacity to. There's no country that relies on government alone. And the Nigerian economy has been private sector led anyway. What the Book of States showed us is that there isn't a single state in Nigeria that does not have interesting prospects for investors. And one of the things we would like to do at NIPC, and the reason we worked on the Book of States with the Nigeria Governors Forum, is that we would like to proactively work with the governors to drive investor activity to each of the states. But it needs to be proactively and deliberately done. And I always say that investors don't listen to what we say. Investors look at what we do. So by our actions, we need to be completely suggestive of the fact that we want investors to come to Nigeria. We want investors who come to Nigeria to be happy with Nigeria and to act for us as advocates to get others to come in.
You talked about actions. What are those immediate actions you think the government can take? Maybe first 3 steps to assure investors that, oh, these guys are serious, we can actually go here. What are some of those, like 3 or 5 of them?
I don't think we have enough time to run through the things that investors would like to see. To run through the things that investors would like to see. But if I can just start with the things that come, to the top of mind. There's still challenges with raw materials coming in for companies to manufacture in Nigeria. It affects all investors, or it affects a large number of investors, not just foreign investors. It affects domestic investors as well. There's still challenges with Aphex, which all of us are aware of, that affects investors' ability to procure items that they need for, their manufacturing activity. We've talked about security. But in terms of what else government can do, investors still talk about, the policy-making process and how they would like a more predictable, policy-making process. But the totality of what I think that we need to do, I would sum up as shoring up investors' confidence in investing in Nigeria. It's something that whatever that confidence means, we all need to more actively do to try to get investors across the board.
Well said, ma'am. Confidence is actually what we need to give them. Thank you so much for your time on Business Morning today.
Thank you for having me.
Thank you. All right, so if Aphex Commodities Market Update is next, do stay with us.
That's right. It's time for Aphex Commodities. And for the weekend at 26th April, the number of deals in the Aphex commodity market was down by 37.5%. Total value traded also went down by over 79%. Well, Michael Martins has a lot to explain to us this morning. Michael Martins is the portfolio manager at Aphex, and he's explaining those. Good morning, Michael. Thank you so much for joining us this morning.
All right, good morning, Nii. Thank you for having me once again.
Yeah, you're welcome. So deals went down, total value traded went down. What happened during the week?
So if you just take a look at the summary of the activities that happened on the exchange over the course of the week, we saw the total value of transactions traded at the exchange fall by 79.31%, from around 2.9 billion naira to close the trading week at 0.6 billion naira. The total number of contracts traded on the exchange also fell by 76.36%, from 169,774 contracts to close at 40,127 contracts. The total number of deals, as you said earlier, also fell by 37.50%, from 24 deals to 15 deals. The Aphex Commodities Index, which is the ACI, which comprises of commodities, maize, soybean, paddy rice, and sorghum, also fell ever so slightly by 0.96%, from 387.77 to 384.04%. The Aphex Export Index, which contains ginger and cocoa, still remains unchanged, staying at 159.35. With regards to the volume of contracts traded on the exchange over the course of the week, we generally saw a decline in the total number of contracts traded across board from considering all commodities. So we saw the total number of contracts traded for maize fall from around 162,670 to just over 40,000. We also saw, and cashew was the only other commodity that traded in comparably appreciable volume, for trading 6,650 contracts last week to just 119 contracts this week. So that's everything that happened with regards to the volume traded on the exchange. With regards to the price, we saw no price gainers for commodities in the week under consideration, but however, we did see some commodities fall, with sorghum being the first, falling by 3.82%, losing 695 naira in the contract value to close the trading week at 17,500 naira per contract. We also saw paddy rice fall by 3.57%, losing also 695 naira to close the trading week at 18,800 naira per contract. All other commodities, maize, soybeans, sesame, ginger, cocoa and cashew all remained unchanged in the week under consideration. And also the fair trade exchange traded commodity, which is the FETC, also remained unchanged in the week under consideration, staying at 14,008 naira. And as we always say, if you want to know more about the commodities market, you can always go to our website, which is www.afexnigeria.com. And if you want to get started trading commodities, you can download our COMEX app on iOS and Android. So that's by and large all of what happened in the commodities market in the week under consideration.
All right, thank you so much, Michael. Well, similar to our conversation last week with regards to prices starting higher this season in comparison to the previous one, would you say that we are at a risk of commodity super cycle?
Thank you very much, Ini, for that question. And like you said, right, the question is extremely important considering our conversation last week and how inflation has sort of influenced how prices have started higher this season in comparison to the previous season. But before I even attempt to answer the question, I think it's important to delineate the difference between a commodity business cycle and a commodity super cycle. And I think we've spoken about this at length during the course of this conversation, right? So the general price dynamics, the supply-demand dynamics that you see happen in the commodities market at any given season, right, is that you have significant supply being available at harvest, and then you have a significant drawdown of that supply over the course of the entire commodity season, with demand very often overshadowing supply, right? And then you see prices trend upwards. The difference between a general commodity business cycle and a commodity super cycle is the fact that the supply sometimes becomes so inadequate that the demand significantly overshadows supply, leading to you having consistently higher prices for whatever commodity under consideration, leading to you having consistently higher prices from one season to another. So just looking at the data that we have at our firm, right? So we've sort of looked at the data for maize, and if we're to use maize, well, we're using maize because it's a proxy for the commodities market. It's the most liquid commodity on the exchange and also in the commodities market in general. It's safe to say that if you look at what the prices have been since the year 2004, right? So we saw a price range of between 32,000 to 35,000 between the year 2004 to 2007. And in the year 2008, where we had the global financial crisis, prices sort of skyrocketed to 47,000 in 2008, and then 63,000 in the year. And then 63,000 in the year 2009. And we sort of saw price range between 60,000 and 70,000 from the year 2009 up until the year 2016, where we had that supply shock, where we had that supply shock in the country, where we had that exchange rate devaluation up until 360 in the black market, and then 305, I think, in the official exchange rate. And then we saw the prices of commodities skyrocket to around 120,000 naira per metric ton, right, for maize, right? So, and prices have sort of inched around that same figure, right? And you saw 80,000 in subsequent years and 90,000 for starting price of commodities for maize. And then in the year 2020, prices sort of started at around 150, 140 thereabout in comparison to the previous season where you just had 90,000. Now I'm putting all those data out there to make a point. If you take an average of what the prices have been from the year 2004 to the year 2015, just before we had that oil supply shock in the country, the average price for maize as a commodity was around 50,500, right? If you take an average of what the prices have been from the year 2016 till date, the average price for maize as a commodity for the month of October, consistently for every single year, as being 100,500 or thereabout. What that essentially means is that prices are currently trading at twice the value that they were trading a decade ago, right? So to generally answer your question, I would say that we are at risk of a commodity super cycle with prices consistently starting higher than they did in the previous season. But I would also say skeptically that we might want to wait for data for maybe the next couple of years to fully confirm that we're in a commodity super cycle. I mean, if you consider just the macroeconomic conditions, right, of the structural issues that we had in the food that we have in the food value chain. If you think about that in terms of lower interest rates providing more liquidity in the market, and if you also think about that in terms of the recent protectionist government policies that we've seen, it wouldn't be out of sort for you to conclude that we might be at risk, or we might even be in a commodity super cycle.
All right, Michael, thank you so much. I see you came loaded this morning. Thank you so much, Michael. Michael Martins is the portfolio manager at Aphex. Thank you so much. Well, Aphex time is not over. We have Oluwafunto Olashimo joining us from Lagos. She's the market development manager of Aphex. Thank you so much for joining us.
Once again.
Yeah, Michael, give us a whole lot of information there. Well, 5 years ago, Aphex set out on a journey to create a transformation impact in the food systems, rural communities, and in the larger society. Aphex seeks to answer the question, how can a sustainable market be built in a scalable and inclusive way, having a long-term impact of livelihoods? 5 years later, what has Aphex done in this regard?
Thank you very much again for having me, and it's always a pleasure to,
have you
always speak to you guys on this platform. So when we started out as Aphex, we started with a long-term commitment to support the Nigerian food system while promoting exchange of fair value across the players within that agricultural value chain. Now, for us to be able to effectively do that, we needed to ask ourselves, how do we create innovative and unique products that would enhance economic growth and at the same time deliver important value to the players within this ecosystem. So for us, measuring impact is all about value creation. It's all about creating sustainable and a systemic change. Now, for you to be able to create value, right, we needed to create framework that could track and measure the impact of our activities in the rural communities where we operate, and within the food value system, as well as the larger microeconomic environment. Also, at the core of our operation are actually aligned with the United States SDG goal 1, 2, 5, 8, and 12, which included no poverty, zero hunger, gender equality, as well as sustainable production and consumption, including decent pay and economic growth. So for us, right, it was more of an alignment with what is currently obtainable at the global scale.
Okay.
Right.
All right, talking about impact, how have you been able to measure this?
So to measure impact, we all know that Nigeria is a very unique place. So for us to even start measuring impact, we needed to first understand the current livelihood and the current value creation within the agricultural value chain in Nigeria. Then we started capturing information and activities that were geared towards productivity, that were geared towards trade and access to finance, that were geared towards enabling and creating a transparent market through the use of innovative technology system, as well as our role and contribution to the structuring of the Nigerian commodities ecosystem. So in order to measure or to benchmark our impact, we consider the contribution of our impact along 3 major lines, which were rural impacts, which were processing impact, as well as the macroeconomic impact. And again, because the SDG goal is core to our operation, alignment of the SDG goal is core to our operation, right? We then selected SDG indicators are set by the United Nations as a measure of the level of our impact in the communities where we operate. So as of today, we have onboarded and profiled farmers, smallholder farmers, which included profiling, registering, and giving them financial inclusion, as well as eventually providing them input and plugging them into a market where they can eventually trade their commodities.
So we also see that unlocking the capital for Nigeria's commodity market is one of your vision. As regards to that, how far have you gone? What are the key milestones?
So again, it's been very interesting journey for us over the last 5 years, right? And the first major milestone for us was in 2015 when we got licensed by SEC as the first private-led commodities exchange in Nigeria. And within the same year, we started our warehouse operation across the key production states for focus crops like maize, sorghum, paddy rice. And then in 2017, we launched our trading platform, our NASDAQ-powered trading platform, which enabled trading of commodities. And the same year, we also started the distribution of commodities prices on a weekly basis. Then in 2019, we launched our Aphex Commodities Index that tracked the changes in prices of paddy rice, soybeans, and maize. And then in 2020, we launched our COMEX platform that allowed both institutional and retail investors to be able to trade in commodity as an alternative asset class. Then later in Q4 2020, we issued our first ever $50 million US asset-backed commercial paper, which was the first ever listed in an African exchange.
All right, thank you so much, Oluwafuntan Olashimo, Market Development Manager at Aphex. Thank you so much.
Thank you very much for having me. Yeah.
All right, we'll take a moment now. This is Business Morning. Stay with us.
All right, so going on now, we go to the equities market, and we've had a pleasant 7 days, but yesterday wasn't so pleasant. Right, Eddie?
Yes, Ini, you're right. I mean, you just had some people who just needed to cash out, from the profit that they've made in the market. It was expected anyways, but the index was down 0.03% at 39,305.48 points, while the equity cap was at 20.570 trillion naira. But to talk more about the market is Tajuddin Olayinka, a stockbroker at Valmont Securities. Good morning, Mr. Olayinka. Thank you for joining us on the program.
Yeah, good morning.
So how would you describe sentiment in the market right now?
At the moment, it's still a bit positive, even though it's too early to, it's too early to actually call, the direction of the index. But right now, the index is positive, 0.07%. It's up. So generally, the mood of the market is high. And of course, if you recall what I mentioned some time ago, we have seen results from some of these listed companies, and we have seen clearly that most of these companies are actually responding in different ways to the adjustment process in the economy. So clearly, what we are seeing now, is the companies responding either positively or negatively to the adjustment process, mostly the short-term adjustment process, and that is expected anyway.
So, I mean, we've seen investors react positively, especially on the banking sector. But yesterday, that counter was responsible for the declines. What happened?
Every time you have some kind of positive news from the heavyweights, like Bitumen and some other banks like Zenith. But Zenith is well now. At least it's having some appreciable movement at this moment. But that is not to say that that is what we will expect for the whole day. I mean, especially before the close of market. Generally, banking stocks, anytime they have issue, they will drop. But if you look at the base of the market yesterday, you see that fewer stocks actually brought down the index. So the bet was positive. It was not a 1%. I mean, it was not a 1. It was not an average. So, to me, I think only fewer stocks actually consider to the loss we saw yesterday. So this money is up, and I do hope that the banking stock will respond positively this morning, even though we have seen some of them, coming up with some results that are not too friendly.
So it's midweek session. What should we be expecting for the rest of the week?
Right now, like I mentioned to you earlier, we are having a positive, positive movement, and we have seen some, not fewer stocks anyway, contributing to this positive movement. I hope to see something, more positive for the day. I mean, with sentiment coming in the direction of banking stocks, mostly.
All right, Ms. Olenka, well, I'll also key into those positive sentiments. Enjoy the rest of your day. Tajuddin Olenka is a stockbroker at Valmont Securities. Now, activity level was mostly negative yesterday as volume declined by about 23%. Value also declined and was at 1.77 billion naira, and all of that was traded in 3,474 deals. Now, Access Bank was the most traded stock by volume, while GT Bank was the most traded in terms of value. Sectoral performance was mostly positive, apart from the banking sector, which was down 0.60%. And we saw declines from all the Tier 1 lenders, GT Bank, Zenith Bank, UBA, Access Bank. Consumer goods was up 0.30%, and we saw gains from Champion Breweries. Industrial goods was up 0.01%, and that was due to the gains we saw from Lafarge. Insurance was up 0.96%, while oil and gas was up 0.19%. At the unlisted securities market, we also saw some declines yesterday. The NSI was down 0.17% at 774.84 points, while the market cap was at 550.76 billion naira. We saw about 3.55 million units worth 85.45 million naira, and all of that was traded in 44 deals. The bond market continued its bearish run yesterday as the average yields in that space rose by about 28 basis points to 11% or thereabouts. Across the curve, we saw yields rise at the mid, the short, and the long end of the curve. We saw a lot of demand for the July 2045 bond. We also saw some for the March 2050 bond and the March 2027 bond. There were 17 deals worth 7.30 billion naira in that counter. The Nigerian Treasury bills market was a bit flat yesterday. We saw only 2 deals on 2 bills. The most was on the April 2022 bill, which was worth 1.17 billion naira. While the October 2021 deal was 1.20 million naira. Now, we had 6 deals altogether worth 1.17 billion naira. At the CBN Special Bills market, we saw 6 deals worth 30 billion naira in that counter. And in the OMO market, we had 10 deals. Well, let's talk to Chioma Udu, a fixed income dealer at GT Bank. Good morning, Chioma. Thank you for joining us on the program.
Good morning, Eddie. Thank you for having me.
So there's an auction today. What should we be expecting?
Well, the auction today, we have 88 billion on offer across 3 tenors. We expect that we're going to see further improvement in rates. In recent time, we've seen rates trend up at the 1 year, over 90 to 100 basis points. So we expect that to happen again today because of the illiquidity within the market. The money market is currently short. We expect further pressure in rates across the yield curve.
All right, Chioma, thank you for your input on the program. Enjoy the rest of the day. Chioma Udu is a fixed income dealer at GT Bank. Well, we'll just have to wait and see how that auction plays out, and that would determine what to expect in the fixed income market for the rest of the week.
Yeah, and once again, we'll see if it spills some goodies to the equities markets like it did last week. Well, we'll just take a break now. When we come back, we'll head to London. And we're in London now with Juliana. Good morning, Juliana. And thank you for being here today again. Well, there's a barrage of company results today. First of all, there's Lloyds Banking Group reporting £1.9 billion pre-tax profit for the first quarter. How are investors treating these numbers?
Well, it's a good result. Lloyds is UK's largest retail lender, and just like we discussed with HSBC yesterday, they've managed to claw back some of the losses that they got last year, mainly down to the historically low interest rates, but also the credit impairment figures. Now, with their trading report that they updated this morning, they announced that net impairment credits for the forthcoming quarter will be £323 million. If you compare that to this period last year, it was £1.4 billion, and that's because, of course, a lot of banks were running scared about all of the government COVID support. The government set aside billions upon billions of pounds to help people with loans, and of course the furlough scheme. But thankfully, because of some of these support measures, we know that the labour market eventually stabilised. So a lot of this money that banks had feared wouldn't get paid back has been paid back by consumers, which is why we're seeing these robust results by Lloyds. Very important to mention, Inni, that this is a great outgoing celebration for their chief executive, Antonio Horta Osorio. He'll be stepping down. He's getting a big role at Credit Suisse. And on Friday, Charlie Wynn, formerly looking after the global assets of HSBC, will be stepping in to take over his role.
Well, we'll say congratulations to him and we wish him all the best. Well, today the U.S. Fed Reserve will announce its latest monetary policy decision. What are the expectations?
Well, the expectations is that there'll be no change. But, of course, Jerome Powell is going to have a lot of pressure on his hands. A lot of people are asking if the U.S. economy is actually at an inflection point. Things are going really well. We've spoken a lot about Britain's successful vaccination program. It's the same situation in Israel. And it's also the same situation in America, which is why so many cities and states are finally allowing people to go out, lifting lockdown restrictions. The labour market is buoyant. That obviously has a knock-on effect on consumer spending. So there are some people who are asking, you know, whether or not some of these fiscal policy measures will be removed. So we'll be looking out for that when the minutes are released. Another important factor as well for the US Fed Reserve is the $2.9 trillion infrastructure spending plan. After that $1.9 trillion coronavirus bill, the president has asked for this new green, clean bill, which will be funded by raising corporation tax. How will this affect fiscal policy? So those are lots of things to look out for, but we're expecting no change at the Federal Reserve.
All right, so a commission of 10 of the UK's most powerful executives from firms, including Tesco, Vodafone, have set out a plan for a post-pandemic economic recovery. Some people believe this will mend the relationship between the business community and the government. What more do we know about this?
Yeah, possibly. It is being described as an opportunity to kiss and make up. It's called the COVID Recovery Commission. So, as you said, lots of execs from Britain's most profitable companies have met, and they've been having some ongoing dialogue with the Chancellor of the Exchequer, Rishi Sunak, and Prime Minister Boris Johnson, not just about how they can, expand on growth, but how they can bridge the gap between social inequalities in the UK, which have certainly expanded because of COVID-19. There's so many reports that do suggest the poor are getting poorer, and the rich are doing pretty much okay. We know that because of all of the Brexit row, business and government haven't exactly, seen eye to eye on certain measures. Now that appears to settle down, and we are on the road of the pandemic recovery. I believe they are happy that they have been given an opportunity to step in and advise the government on ways to go forward. But yep, it's certainly not just about growth. It is also about levelling up and bringing everybody an opportunity to participate in Britain's growth.
All right, Juliana, thank you so much, and talk to you later on in the day. So we move over now to the crypto space. Ladi, what's going on?
Well, market's not looking so bad. Market cap $2.03 trillion, down about 1.33%. 24-hour volumes down about 7%. Bitcoin dominance up about 0.07%, but still at the 49.78 region. Price of Bitcoin at 8 a.m., $54,282, up about 0.79%. 24-hour volume, $46.370 billion. Let's talk to Tosin Olugbengana, blockchain expert. Hello, Tosin.
Hi, good morning.
Good morning. Thank you for joining us. So the last halving, what price pattern are we expecting for Bitcoin, and when is the next halving?
Okay, so halving happens every 4 years. So we had one in 2012, there was one in 2016, there was one last year, that is 2020, and the next is going to be 2024. So you know that we had a bit of dip in the last 1 week when Bitcoin dropped to about 44,000, and the pattern of bull run after every halving is also what we are experiencing presently. All right. So after this little drop. We're going to be experiencing a huge drive up in the crypto space. So that is what we are to expect. So the next halving is going to be the next 4 years. But this year, 2021, which is immediately after 2020, we are expecting to see how the bull run till around September this year.
Okay, so I've noticed that miners have been, quite quiet. They've not been in the news recently. What's happening in the miner industry?
Okay, so the thing is, the miners, most of the trade is between the exchange reserves. Most of those reserves have the exchange available, all right? And because of the little bit of drop in the market, there is a lot of liquidity within the market for those who want to buy. So that is why the activities of the miners have been a little bit low. So, but the moment that exchange no longer have BTC to sell to those who want to buy, that is when there is upward pull. More people want to buy that, but there are fewer people who want to sell. Then, at that point, the miners will now enter into the market to make available enough Bitcoin for people to be able to buy.
Okay. All right, Tosin. Thank you so much. Enjoy the rest of your day. All right, let's look at this FTX chart for Bitcoin. Key levels to watch here. I spoke to an analyst earlier. He said that the key level to watch is this 64,000 resistance. And if it hits there, we might actually expect a pullback. So that's one area to watch. This morning, we had some volume drop. The KDJ is still up here, and the MACD cross in a bearish momentum right now. So right now, we should be watching these key levels. And another key level to watch is the 47,000. So the market is not looking bad, but some altcoins are doing well this morning. Like Dogecoin was up about 20-something% this morning after that massive pullback. So it's not looking bad.
Yeah, correction time, I see. All right, well, that's where we'll say thank you so much for watching Business Morning for today. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching.